Okay, stock market, 1 to 3 month analysis. We're going to look at the SPY. Now you can get our full analysis on weekly and daily analysis and our indicators by becoming a level 1, 2, 3, or 4 member, and you will get the stock index report daily. Matt does an amazing job on this every single day, and he shares all of our charts, all of our indicators, and so much more, key levels, commentary, all of that. I mean, it's just amazing. And if you just want to become a level 1 member to get this because you're interested in the stock indexes, you will see that on the SPX, NDX, RUT, and you can subscribe for $45 for 3 months. How can you not do that if you're interested in the stock market? To start out this section, I'm just going to share about a 1-minute recording from last week. So we see a failure coming in here either today on Friday or into Monday or Tuesday, and then the market trying to rally again. But because of this formation, we are looking for a further decline, which comes out to the end of the year, where these cycles come down and nest. You can see in here these blue vertical lines that the low projects out to 1227 to around 1/4, January 4th, and that means that there is only a very small likelihood that any rally will be able to come that holds, and most likely declines will come. We had said last week that our projection on the SPY was around 386. That is the top of this support zone right over here, which is at 3865 on the SPX. So it's 386 or 3865. And this, a middle of that right there is at about 3792. Either of these could be where this declines to towards the end of the year. So that was what we said last week. Now let's look at this week's intermediate analysis. All right, so let's take a look here at the stock market. We're going to look at SPY. So this is an SPY chart without our analysis on it. It has no annotations, no cycle analysis, anything. It has on there our two different moving averages, where it looks at a 13-week and 34-week moving average. And right over here is our reversal scout, which is a great indicator for cycle, picking cycle bottoms and tops, and also for understanding the direction. You can see in here that the momentum, directional momentum conditions are still positive here in the stock market. So now I want to switch over from this blank to take it to our weekly analysis that has everything on there. And you could see how much that changes. And for those of you that are brand new, you're going to say, what is that? Those of you that understand our analysis would say, how could I ever live without this? Make sure that you go to the askSlim.com site and you can see right in here how to learn about cycle analysis. Just go to the workshop tab and we've got a great video on there for free for you to watch. So what we're looking at here is the S&P 500. I'll give you just a little bit of the of what we have in here. Cycle brackets on the bottom for those of you that are new. We have some out of phase cycles with a larger cycle right in here. This is the dominant cycle we were looking at. This is the minor cycle right in here. And you can see that this larger cycle right over here bottomed pretty much on line there. It bottomed with these other cycles right over here, and then bottomed over here on this low versus this low. There were two different lows that were pretty close right there. So this is a very valid larger cycle here, and this was the dominant we were looking at before, and you can see both of them come into play right in here. So the timing for the next coming low is somewhere out over here at the very beginning of April, or I'm just duplicating that and bringing it right over here, the sometime around the near the end of February. So end of February through sometime in April is where this next trough is due. This was the everything bubble, the Fed blowing everything up. This is Great Reset Phase 1. Some people have written to me, what does this mean? Well, I think that this whole decline in here is just Phase 1 of the Great Reset of 13 years of central bank idiocy that blew everything up, and now they have to correct that, and that will go on for many years to come. And there will be a some bull markets in the middle, and I'll show you that if you watch our big picture analysis, the year-end show coming up in just a couple of weeks. So do make sure that you remind yourself to watch that. So let's just look at these last cycles right in here, and you can see where we are. Now, we had talked about, in a brief little video that you will see at the very beginning of this little section in here, you will see that there was a analysis that showed that there would be a break somewhere down to around 386. So I'm going to insert that little clip from last week in here. Then you will see right there that it's already heading down over here to about 379 is the next level, as the stock market is quite weak. So the likelihood of further declines is still in hand right over here. Now, we had talked about that the low would come sometime around maybe just after Christmas, and then get another likely upside move beginning. And we're picturing that getting up here towards that 41, right over there, 415 or 4150 on the S&P 500. The deeper this gets, the lower the likelihood of that much of a rally coming out there into January. But right now, it still looks like it's quite plausible. So the break came over here from the resistance. It tried to get up panicked on that panicky upside move through this VTL, valid trend line, which you can learn about in our cycle analysis workshop, but then failed and came back down into support. So this is following our scenario very closely, and this is the minor cycle bottom that comes in here sometime just before or after Christmas, and then begins to move up again. So that's this next picture that we have over here of a upward forecast with getting another rally. Because of the current sizable decline that we're seeing in here right now, it does give me wonder whether or not it can make it up here to 4150 or 415 on the SPY, depending on how much further this gets down, as I say. So this followed the pattern almost spot on, as we showed in that little clip at the beginning of this segment. And now it's set up for further decline out over here into coming towards Christmas, and then likely beginning the rebound. Short-term analysis has shown that it was likely to potentially go out as far as close to New Year's in this decline, but now I'm getting a sense based on this capitulation of magnitude, it might bottom a little bit sooner than that, and then actually be able to give you an upside move between Christmas and New Year's, which is pretty common in positive seasonality. So in this 1 to 3 month view, it essentially says complete this downside here in the next approximately week, then begin to move up again, testing the high right over here, which was at 410, potentially 415, and then moving down in this yellow zone, this period of risk, which points to January through March for a decline. It's important that you see that this note here, VIX intermediate trough, in other words, the low in the VIX, is likely to come mid-January to late January, and it aligns with this peak that we're looking at right over here in SPY. So that's why we think that there'll be another rally in here, but then a decline. Now, in the beginning of the show, if you didn't watch it and you're just watching a clip here on YouTube, I showed a chart that was put out by Goldman Sachs that talked about where the market is likely to fall to. And the soft landing scenario was testing this low down over here, right around 350. 3,500 on the S&P, with a potential, they say, of getting down to 3,150. We said 3,200 over here, or 320 on the SPY, and that still is the scenario. So over the next 3 months, we expect a bottom here, another attempted rally, and then getting into a very ugly period, potential for a very big decline here out in this mid-January through March or early April period. That has been what our analysis is. This blue box right over here is the fib extension zone. The top of that right over here is at 344. To me, that's really a best case. The bottom of it here, which is a 100% fib extension, is 326. And then this major support right over there, 61.8%, is in the area of 320. That would put us in our projection of 30 to 35% down in the stock market for this bear market leg that we're in right now. And I think that's what we're looking at over the next 1 to 3 months. I hope you found that to be very, very valuable. Please do make sure that you follow us on YouTube, and I know a lot of you are watching it here, so make sure that you become a YouTube subscriber. Also, don't miss this final week of our holiday special, Give the Gift of askSlim. You get a bonus gift. In other words, if you sign up for this non-recurring membership, we're going to send you back a gift card from Amazon and really cut your costs further. So this is the lowest prices of the year. And if you like what we do, well, this is going to expire. So you're going to have to resubscribe at the end of that 3 months. So you won't be charged again. Give the gift to someone you know who loves trading or technical analysis, or give the gift to yourself. And it's great for first-time members or people that want to upgrade from our free or level 1 membership. So I think that's great. To sign up, to get more info, click the Learn More button up at the top of the askSlim front page, askSlim.com. And if you have any questions, you can write to Matt at askSlim.com.